Hi guys, welcome to another honeystocks.com weekend analysis, and this one's going to be going out on the 22nd of March 2020. Now, I think we all understand that the market and everything that goes with the market is secondary to everybody's health at the moment, so please do stay safe out there. Please do listen to the social distancing. I'm hearing horrific stories from hospitals in New York, London, from friends, etc. So please do stay safe out there. To the other end of that, obviously you all follow my work just for the analysis that I'm going to be giving, and obviously the charts that I'm going to be walking through in the next 20 minutes or so. If we have a situation where I'm presenting a chart that you necessarily don't agree with, you don't need to send me abusive emails or messages. I had quite a few after last week's bearish call in the market. Hopefully we're all grown ups and we're all adults and we don't need to resort to nasty emails. But there's obviously a lot going on with the market, and I'm going to be walking you through the charts for the S&P 500, the Dow. Obviously there's a lot of individual stocks that I think you need to be considering, and I'm also going to be sharing with you the list of stocks that I've provided my clients over the last 7 days as well, because I think there's a lot of value to be had there for you as well. Now, what I'm also going to just throw out there is that I'm going to be taking a step back from social media over the coming weeks. There are more important things in my life, and this is something that I've realised a lot over the last 7 to 10 days. So I'm going to be focusing primarily, obviously, on my clients, my subscribers, etc., providing those guys the support that they need at the moment. So like I said, social media is going to be taking a step back, but hopefully you get some value from this analysis. As always, there's going to be options for those of you that maybe want to come in and join our group at the end of today's video, so stick around and please do check that out. But if you don't make it towards the end of the video, I totally understand that the Scottish accent can be a little bit difficult to understand at times, and if you don't make it to the end of the video, please do stay safe out there, and like I said, please do respect that social distancing and just remove yourself from society. It will massively help everybody out there. So let's dive into the charts and let's see what they're telling us this week. So as always guys, let's start off with very, very important. There's not any investment advice here. Just do with this information as you wish, and just make sure you're comfortable with that before proceeding any further. Most of you know this already. I'm registered with the CMT Association. Technical analysis is something that I'm widely known across the world for. Go and check that out. It's quite a big deal. I'm working my way towards my chartered status at the moment. And if you do get some value from this, guys, please, as always, bottom right hand corner, feel free to subscribe, and maybe we'll see you next week. So the charts, I know you're all here for the charts. What are they telling us this week? Well, I think with the S&P 500, I think that seems like a logical place to start. Now, obviously we're in a very headline driven environment at the moment. Now, even if you take the headlines away from the equation and you focus on just what the stock market is telling us, the stock market is also in a bit of distress. I think we all understand that, we all know that. But when we look at the key levels in the market, and this has been my chart for the S&P 500 for quite some time, I've already started mapping out worst case scenarios and where we can maybe expect to maybe find support. How far is the stock market going to drop? Now, I think what we have to be very, very conscious of here now, guys, is that we have now closed below the lows of December 2018. That is a massive deal. That is not an environment where we want to be buying stocks. I know there's many of you out there that will have the valuations in mind. You'll have perceived value, but I think what you should probably understand is that certainly with the fundamental approach, and I have massive respect for it, But when we have these key support levels in the market breaking, I think the stocks that you think are on discount and maybe they're already dropped 30-40%, how would you feel about buying those stocks if they are 60-70% on sale? Because I think that's ultimately the direction the market is currently going. There's obviously a wider economic impact here. I don't think the headlines are going to stop anytime soon. Yes, you buy stocks when blood is running in the streets. I totally understand the concept, but I don't think the blood is running in the streets yet. I think there's a lot more downside still to come, and that's what the S&P 500 is really telling me at the moment. Is I would expect, and I don't think it's going to happen as quick and as fast as what we've seen, this historic 30-odd% drop. I do think we are probably going to chop about sideways here, but ultimately start to move down towards the February 2016 lows. I think tech has obviously been a leading area of the market. Many areas of tech have held up, but I think it's only a matter of time before we come down and we start to test these key support levels. And I think if these levels break in tech, then I think it's good night tech for quite some time as well. We already know that financials have taken a massive back seat. Goldman Sachs, JP Morgans of the world, etc. They are all in a lot of distress at the moment. And again, I'm going to be walking you through a lot of individual stocks this week. I think there's around 20, maybe 25 individual stocks that I think should be on the radar for the forthcoming week. Now, I'm getting a lot of questions again about gold. Now, gold is obviously a historic safe haven asset, and I think when we understand what happened in 2008, and I've already walked through this chart, but what we had back in 2008 is, and again, you could apply this rationale to a lot of these defensive areas of the market. In times of market distress, they become another source of funds. And when we look at 2008, gold, although they obviously rallied hard, we had a massive drop of 26% before it then went on an 80% rally to the upside. So what we're seeing at the moment is perfectly normal with gold. It's logical. You just have to look to see what history has told us. We know that history isn't going to give us the complete answer to what is going to happen in the future, but it can give us little clues. And I think when you understand that we get these sell-offs, and then ultimately the smart money starts to move in to the safe haven assets. And I think gold, I think we can certainly look at gold, and I think above 1450, I think you can remain bullish. I would like it to see the hurdle of the 200 period simple moving average clear. I think that would be a bullish signal again for gold. But equally, I'm very happy to revisit my thesis on a break below these levels here at 1450. Now, for full disclosure, this is a position that I am currently in. I'm in the US dollar index. We've had a huge breakout here, or I say huge breakout, we've had a good breakout in the US dollar index. And when we look at the breakout, that breakout goes back to 2001. So that's a big deal. Now, for those of you that are maybe missed the breakout and you didn't get in, I have filtered it down to the daily chart, and I think above this level would make a lot of sense for those of you that are maybe looking to get in and buy the dollar index. It makes a lot of sense at the moment. There seems to be a rush on the dollar. I think everybody wants to own the dollar, and I see this ripping very, very high if we can get above this level at 104. So I think those of you that maybe have the flexibility to trade currencies, I think the dollar index would make a lot of sense for many of you. Now, individual stocks this week. Now, I think that the one thing that I would like to maybe just pass on this week, during the week, I sent a memo out to our clients and subscribers, just highlighting how the market was due to have a bit of an oversold bounce, but that bounce to the upside isn't a signal that the market has now found its bottom. And I think this is something that many of you struggle to get your head around sometimes. The way that trends work is when the market is going up, you obviously want to be a buyer of stocks. When the market's going down, you don't want to be buying stocks. There will be signals in the future that tell us to buy stocks when the market is approaching a bottom. But any significant rallies that we get in the overall market and that we get with individual stocks, that offers opportunity to go to the downside. In the same way that you get pullbacks and uptrends that offer opportunity, buy the dip is a well-known phrase, well-known saying, but the opposite is true when the market is in a downtrend. So any rallies that we get to the upside, you need to start thinking about the mentality shift of maybe looking to go short on the market, and that is a massive thing. And I think with Southwest Airlines, I think what we've seen recently with a couple of the airlines is we got a bit of a rally during the week, but again, as our clients and subscribers already know, they were already planning out their short positions, and I'll share with you at the end just what that looks like as well. Starbucks is in a lot of distress at the moment. I talked about this one last week. Again, we had a rally. That rally offered opportunity to go short. The reason that we're getting these rallies is it's the way that I view things is really just a bit of an oversold bounce. So we just need to pay attention to the momentum indicators. I think if we get these rallies to the upside, like I said, it offers opportunity to go short. And I think Starbucks, nobody's visiting Starbucks for the foreseeable future. So Starbucks is a company that I would fully expect to suffer really badly. Roku, again, I think when we look to history, what happened in October 2018, this is a stock that dropped, I think, as low as $25. I'm not saying Roku's going there, but when we consider that it's had a high of 176 and we're currently at 76, we're in a very clear downtrend, guys. And I think, again, build in your analysis, build in your Fibonacci's, build in your moving averages, your horizontal support resistance. These rallies offer opportunity to go short. Goldman Sachs, again, highlighted last week as bearish below 150. We are at 138. But again, just build in the analysis. These will offer opportunity at some point, perhaps not Monday, maybe not Tuesday. But if you build in the analysis, set the alerts, these will offer opportunity. And I think we can be bearish on Goldman Sachs provided that we are below 150. To the other side of that, there are a couple of companies that have held up pretty well. Although I am obviously bearish on the market, I'm sure most of you have picked that up already over the last few weeks. But I think with Amazon, it's a very unique situation that it's in. Obviously, everybody's moving online shopping, etc. Amazon are the leaders in this space. I love Amazon. I love Amazon Prime. I use it just as much as the next guy, but I think you can remain bullish on Amazon. I'm getting a lot of questions asking if they should sell off, etc. I think we've had a failed breakdown there with Amazon, and it seems to be doing pretty well so far. You would want to see, significant levels of resistance clear. I think, $2,000. Would I be going in and buying it at the moment? Probably not. I think if you're out there, you're holding Amazon, I think you can continue to hold it. But again, you might just want to be aware of these levels where you might want to just say, do you know what, let's not take any chances here. But new positions, I think there is much easier money to be made elsewhere at the moment. Now, I understand this one might be a little bit controversial. Obviously, it's Apple. I use Apple products myself. I like Apple a lot as a company. But at the moment, price is breaking down. And I'm not really concerned about the products. I'm not concerned about the story of Apple. I focus on what price is telling me. I think we've had a very clear and definitive breakdown here. I think this is a signal that there may be a change of trend. When we consider that Apple stores are now closing all across the world, that's not a good bullish signal for Apple. So I think if you're out there, you're holding Apple, you need to be very, very careful here. And maybe for those of you that are perhaps looking to initiate a position in Apple, I think going short, provided that we're below this level at 234, it would make a lot of sense to me. Now, Netflix is an interesting one. I think with everybody trapped at home at the moment, and make no mistake about it, in the UK we are trapped at home at the moment. I don't know if it's necessarily hit the US and Canada yet. Certainly our UK and Asian subscribers know what I'm talking about here, but Netflix is one that you would expect it to do pretty well, but I think when we look at the technicals, price is currently in the middle of no man's land at the moment. This is where it's kind of halfway between key support, key resistance. There's not any real direction with price, but I think ultimately you can still remain bullish on Netflix provided that we are above this level here. I think if you were to get a drop below this level, I think you would need to be very, very careful. Start to maybe get a plan of action in place, start to plan out your positions like you should be doing with every position that you own. But again, I wouldn't be buying Netflix at this point. I wouldn't be taking any chances. I think that there's far easier money to be made in other areas of the market. Now, EHTH seems to be holding up fairly well here. We've got a very key support and resistance level. It does seem to be holding. If just let me remove that actually. It's chopping about sideways, very, very similar to Netflix actually. It's kind of in the middle of no man's land. So I think again, just plan out your positions. I think any closes below this level, and I think that's a problem for EHTH. Now, Twilio is a position that I initiated on Friday. As we know, we when we get these pullbacks, they offer opportunity. Now, when I initiated the position in Twilio, I was fully expecting the trade to work out, and it did work out. I made good profit on the trade, but I wanted it to drop a lot further than what it actually did. I was fully expecting a Friday sell-off. We had an optimal entry, but Twilio actually held up okay. I didn't want to hold it over the weekend unless I was $7-8 per share in profit. As it transpired, running into the close, the last 30 minutes, I was only $3 per share up on the position, and I didn't want to take any gap risk. And what a gap risk is holding over a weekend, and then you've got a $7-8 move against you when the market opens on Monday. So I didn't want to take any chances with that. I didn't hold it over the weekend, but this is a position that I've very much got on the radar for Monday. So if you're out there, I think Twilio, I think you can be short on Twilio, provided that it's below this level here. Clearly, if we break above this level, if we don't get a move to the downside on Monday, I wouldn't touch it. If you break back up above this level, again, wouldn't touch it. But I think this is a stock that I think you would expect to perhaps follow the overall market. I don't see any reason why that one would hold up better than other stocks out there. So that leads me on to energy. Now, if it's not escaped your attention, if it's escaped your attention, I should say, oil is in complete free fall, and it has been for a few months now. Now, Chevron is a leader in energy, but the stock price is in massive distress at the moment. Oil is obviously in distress. So when we get these big rallies in oil, obviously crude oil had a huge rally last week before it just fell away, as you would expect with any downtrend. And that's going to have a knock-on effect to the companies like Chevron, like ExxonMobil, etc. Those companies are not going to hold up particularly well if oil is plummeting, because obviously the profits on the other side of it are just not going to be there. So I think with Chevron, I think absolutely you need to be in a bearish environment for Chevron. The mindset has to be bearish, and I think any rallies that you get to the upside, I think you just go short. Same with American Airlines. I think if you're bullish on airlines at the moment, I think you probably need to start rethinking your strategy. I get it, household name, huge brand. Boeing are obviously in massive distress at the moment, and again, I would just urge you that history is filled with companies that just don't make it back. Yes, the government bailed out a lot of the banks, but is the money there to bail out the airlines, the Boeings of the world? Yes, there's a lot of defence contracts, etc. But I think if you're out there and you're looking at Boeing and you're saying to yourself, $95, or you're looking at American Airlines and saying, it's $10. Again, when you look left on the chart, we can see that American Airlines has traded at $2 per share, and that was as recent as 2008. So although you might think there's a perceived value in buying American Airlines at $10, you have to understand that stocks can go to zero. Some companies will not make it back, and we might start to lose some of these big, well-known institutions, these brands that we've all come to know, we love, we use. Look at something like General Electric. Once the most valued, highest valued stock company in the world, it's, plummeted to $6. The history is full of stocks like that, guys. So don't think that stocks can't go to zero, because they can. And I think at American Airlines, there's a lot of distress. Nobody's going to be flying for quite some time, so you cannot be bullish on American Airlines at the moment. And I'm sorry if that hurts anybody's feelings, or if anybody's out there and holding, but it can get a lot worse than you think it can. Again, Match, this is a stock that has been highlighted in the last couple of weeks. Again, we're now broken below $50. That's not a bullish signal for Match. This one's going to be controversial in the same way that I know Apple is going to be controversial this week. Disney, again, great company, but we have to do what price is telling us, and price is telling us that it wants to go lower at the moment. We are obviously below $100 now. We've pulled to the downside. I would expect some sort of little rally, but again, I think any rally that we get in something like Disney, again, I think you can go short on the stock. We're starting to break below key support levels. That's not a bullish environment. And I don't see value kicking in quite yet. I think there's a lot further downside. Wynn Resorts, obviously, and I'll actually share with you guys the full list of stocks actually from my client analysis from last week, because I think there's a lot of value to be had there as well. But Wynn Resorts is a stock that quite a few of our clients and subscribers have shorted below 100. It's obviously done very, very well, but again, these rallies and downtrends, they offer opportunity. Hotel chain, casinos, who's going to casinos, who's going to hotels? Nobody. So again, I think you just have to treat any rally as a short opportunity. We've obviously got Zoom. Now, Zoom is one of only a couple of companies that I think represent any kind of sense to go long on at the moment. I think every business in the world that has any kind of global infrastructure is looking at Zoom. I have experience with the product. I think it's an incredibly efficient product for what it provides, and I know why the stock is leading leading that area higher, leading that stock higher. It's just it's what's the word I'm looking for here? It's a product that everybody has a need for in the business world, and I think with Zoom, I think you can continue to be bullish. It might just be one of those stocks that defies all all else in the market and continues to rip higher. But price is going up, so it might be one of those. If you're looking to buy, it might be one of those that makes a lot of sense. Shake Shack again makes 0 cents. Fast food restaurant, whatever you want to call it. I think we're close to breaking below $30 here. It makes no sense at the moment, in my opinion. Now, Tesla is one that I get requested on probably just as much as a lot of the other favourites. I think we've obviously had a bit of a bounce off, a very key support level here in Tesla. But once we've got that bounce, I'm now starting to look at these levels here, and it looks like although we've got a bounce here from the 76.4 retracement level, it looks like we've had a rejection at the 61.8. So if you're out there and you're bullish on Tesla, I think you need to be very, very careful at the moment. I think the path of least resistance is probably down at the moment, and I think you need to be very, very careful. I think we've had a rejection of price here. Again, happy to reconsider that thesis if we start to break above these Fibonacci levels, but again, it makes no sense for me to be long Tesla at the moment. Now, again, we're looking at McDonald's, restaurant, fast food. Doesn't make a lot of sense to me. Retracement, pull back to the 61.8, pullbacks and downtrends offer opportunity. So you could either have shorted it here or maybe wait for the next opportunity, which I think would be below $146 there. Marriott. And for those of you that maybe haven't seen the Marriott CEO addressing all his employees last week, which was utterly heartbreaking, it's one of those companies that is going to suffer really, really badly. I think we all know the hotel chains. Again, we've had a monster rip to the upside, which again, fully expected, and that has offered opportunity to go short. Again, Marriott is not one of those that's going to flourish in the current environment. Intel, I think below $45 makes a lot of sense to go short on. Bank of America breakdown here. We're now below $20, and again, I don't see any reason why you would want to be holding financials at the moment. 0% interest rates. It's not a good environment for banks and financial institutions at the moment. So that's the analysis, guys. But what I'm going to do with you now is just share with you a list of stocks that have done very, very well over the last 7 days for our clients and subscribers. Many of them will probably be actionable for you in the coming 7 days as well. But if you have enjoyed this, please do subscribe to our channel. Give it a thumbs up if you've enjoyed this. It all helps with the YouTube algorithms and all that nonsense. So the other thing I just want to touch on as well is if you are somebody out there that is struggling in the current environment, if you're somebody that would like to come in and join one of the best trading groups on the planet, I'm not using those words lightly. It's very, very nice place to be, very successful place to be. So with our membership at the moment, you get 1 year access to our trading ideas, our scans, our premium weekend analysis. I'll show you what that looks like in a second, and for $500 it's a bit of a no-brainer. But this is the list of stocks that I've provided last week. For those of you that don't know, my social media analysis is a tiny part of what I do at honeystocks.com. To go alongside this free analysis, which I know a lot of you follow because there's a lot of value, a lot of you are trying to learn and stuff, and I couldn't be happier at that. But every week I also provide a premium analysis for our clients, and within that premium analysis I don't talk about those charts to social media. And this is the list of stocks that I recommended and posted as short opportunities for our clients and subscribers last week. as you can see there, there's obviously a lot of restaurants, there's a lot of travel companies, retail, etc. And you can have a look at and see how those performed. Now, what I would say is a lot of these stocks, although some of them are showing minus 40%, minus 30%, a lot of those were minus 60%, minus 50%. And when you look and you have a look at the success of our group, our clients, this is Michael. I shared this one last week actually. He's now made it to 6 figures on his account. This is last week. This is Nick. One of the worst weeks in stock market history. His overall account is up 10% in a week. We've got Michael, $5,000 day. We've got Elliot, who's taking advantage with his options, and taking a nice profit there. Again, another £15,000 profit. Now this is done during some of the worst market conditions that we've ever seen, and these are just what some of our clients have done, and obviously I'm immensely proud about that. But if you are somebody out there that is struggling, if you're somebody out there that doesn't have any structure, we are providing full access to our trading program, our technical analysis program. If you're somebody that's struggling with analysis, you can go and check that out. There's a link below if you want to register your details. We'll reach out to you. But it's a very, very cool place to be. But we can't help everybody, unfortunately. If you're trying to grow a tiny account of a few $100, I get it all the time. The types of stocks that we are posting at honeystocks.com, it's not something that's for somebody that's trading with a few $100. If you're trying to fit trading around a career or business, you're maybe trying to get away from day trading, maybe if you just want better consistency and just learn this stuff for yourself, it doesn't have to be massively complex. And I think that's why most of you follow my channel, because I make everything very, very logical for everybody, and that holds true with our trading group or community. So if you're out there and you're maybe suffering from losses and maybe you want to learn a new way, you don't need to suffer. You can pick this stuff up. It's something that's available for everybody. So I think most of us are probably going to have a lot of time in our hands over the coming weeks. So if this is a skill that you would like to pick up and maybe you'd like to be part of just an incredible group, then feel free to go and register your details on our website. But from the bottom of my heart, thank you very much for watching, and please, please, please stay safe out there. It's very, very troubling times, and I don't want to lose anybody. So yeah, stay safe, guys.